Hello and welcome to another Major Market Movements End of the Week Market Review for June 12th, 2015. I'm Quad G, and in this video we're covering the PM complex. Starting off with gold as usual, and wanted to point out this daily chart here where we had this trend line starting all the way back here from the March low. It's built support here and it was tested several times here, eventually broke through. We got the impulsive breakdown, and now we're seeing this back test this week, right up here in about 1192-ish. And now my expectation is that if that back test holds, is successful, then we should see some maybe some sideways chop and then another move to the downside. Also on the QG3 here, you can see we're still in a bearish alignment, though contracted just a bit. But the 20 DMA is also going to be a key level of resistance, and right now it's come down to about 1191. So it's possible we might get one more test of that 20 DMA and then see another push to the downside possibly next week. But overall, that's looking bearish. And on the week here, we just got an inside positive week inside last week's negative candle. So very neutral candle there. And the EWO, again, not showing us much of anything. It was basically a very neutral pattern as we just kind of chop sideways here very close to the zero line. So no negative divergences or positive divergences have really been set up yet in that oscillator. The RSI, we saw the dip below the 40 and a bounce back up into this neutral area between 40 and 60. But I do think that dip below the 40 is an indication that that support is soft and could allow for a continued descent back down to at least test 30, maybe even lower. And gold spot weekly MACD, where we've closed out here, is a neutral pattern on the week. And on the daily, we're open to the downside still. So overall picture for gold, I think it's still, we're in the summer doldrums. I think that's the best way to sum it up. And it's gonna, I think it's, I think I mentioned this last week that the trading here in this market could be kind of dull and boring for a while. You see a lot of choppiness, maybe an occasional shot down, and then a retrace that retraces back up into engulfing most of the mania that may have been generated from the impulsive move, whether it's up or down. So a lot of not very interesting trading, nothing that's going to go crazy, off the wall, exciting, I don't think, at least until we get into the August time period, August, September, which is often a very key seasonal low in the market. If the price continues to wind its way down that way into that time frame, then it could set up August as being a really excellent low again in this market. So I think it's best to just, if you're short, keep short, and but don't get overly excited one way or the other, because it's going to be kind of a crazy market with lots of chop just out of nowhere. So with radical swings like impulses that go up and then get beaten right back down, or a 2 or 3 day sell-off that gets mostly retraced the following 2 or 3 days. So I think that's what we have to look forward to. Let's move on to silver. All right, so silver here, we continue to kind of wind sideways and down. Yesterday we did have this little hammer candle, but no follow through to the upside. I think it's just all part of a consolidation pattern. Could we have a bottom here yet? It's certainly not showing itself if it is. Really not much to do with that market right now. And let's see, the QG3 is still bearish to the downside. We got the 20 DMA bent over here and sliding downward as well. So the 10 EMA and the 20 DMA are going to be both key levels of resistance going forward. And you can see the upper Bollinger Band is also keeled over and starting to move down as well. So this is all, with all these lines facing downward, that's usually very bearish. So my expectation is we'll continue to see some follow through to the downside. Silver on the weekly, we get another weekly close that's lower. It looks like, let's see, last week's intra-week low was at 1596, and it looks like we're going to close right about that level. But it's still bearish as it is. The EWO, we do see a bit of a negative divergence here between this last swing low and this low. You see that the oscillator is dipped down below this last swing low here. It's lower, but the price has not exceeded that last swing low at this time. So it's kind of a leading indicator that more of a bearish vibe to the downside is looking likely. And the RSI here, same thing, this negative divergence between these swing lows. We got the lower low in the oscillator, and we've busted through the 40. We're continuing to trickle down here. I think we're eventually going to hit the 30 at least, maybe even lower. And then on the MACD weekly, we're still slightly open to the upside, though contracted. And the daily, still wide open to the downside. So silver, again, looking very bearish here at this point in time. So let's move on to platinum. Okay, so platinum continue to sell off here on the daily. The QG3 is open to the downside still with a bearish alignment. The Bollinger Bands are also pointed downward. 20 DMA pointed downward. 20 DMA, another key level of resistance. Now that we're on this side of it, the platinum on the weekly. Let me zoom in here. Looks like we got a inverted hammer candle here, setting a key resistance at the high of 1118.90-ish. So while we remain below that level, I would expect more bearish behavior. Get a weekly close next week above that level, and that could be an indication of a turnaround. So key level there to be watching for. And the EWO, really nothing to point out there. There is the potential of a positive divergence here. If we do get an incremental low underneath this low, it would more than likely set up a positive divergence in this oscillator, with this being a higher low in the oscillator. But that's yet to be seen. Platinum on the RSI, we have broken the 40 yet again. And much like the others, I think we're going to come down here and test the 30 at least, maybe even lower. And platinum on the daily, MACD, open to the downside still. And on the weekly, we're pretty much neutral. So I would say overall picture for platinum is still bearish, especially while we're below this 1120, 1118 level. Okay, so let's move to the Elliott wave charts here. All right, so here's gold. This is my long-term count. It's the only count that really makes the most sense to me, even though it's kind of ugly. Um, and it's suggesting that we're in the final stages of an expanding ending diagonal count, which calls for at least one more lower low in the price. And I can see that happening if the price maintains a presence below that 1204 level and that purple trend line. If we get a pop up above either of those two or both, especially, that could be an indication of a possible turnaround. At least the downside would be in jeopardy at that point. Maybe not altogether killed, but in trouble. So, but while we're below that 1204 level, I think we'll continue to see some sideways chop and downward behavior down into the August timeframe is what I'm expecting. It's very possible we could come down and test this blue trend line a third time and get a bit of a reactionary bounce off of it. Maybe up here, that's pointing at the red. Maybe get a little bounce and then eventually break through for a 1, 2, 3, 4 rule of 4 breakdown. I see that as a possibility. Okay, go silver here. We're in this bearish triangle. It's still got at least one more leg to prove itself, to a three-legged move to the upside to prove that it is a triangle. And I would prefer that this, what looks like a double zigzag to the downside here, a CXC for D. I'd like to see that end fairly soon. There is a chance that we could see the price come out and take out this last swing low, just an incremental low just underneath it, maybe about 1550, 1540-ish, and then bounce back up and basically chew up this lower blue trend line with some choppy action through it as a form of wave E. That would obviously bring the primary trend line down, obviously, for the triangle if we came down to 1550 or so. But then the expectation would be for a three-legged bounce to the upside and to finish the triangle, and then, of course, a thrust to the downside to finish the triangle thrust pattern. And at the end of that thrust, which I think has the potential of coming down and taking out the end of this nasty little hammer candle that we got back here in October, or not October, December of 2014. We can see that tested or maybe even exceeded, maybe into the upper 13 level, and then see this market rally right back up, bounce all the way back up over a period of time, right back up to where the end of wave E, wherever that ends up being, possibly in the upper 16 level, and test that blue trend line possibly later on in the year. That would be probably the most excellent sign of a major bottom and reversal that I've seen in a very long time. That would be just a prime series of events that would be a strong indication that this market has finally put in a major low, and we are indeed starting into a major advance to the upside. So far, this whole conglomeration has been very dicey. It's been very ugly to try and deal with. Not preferred at all. So I would invite such a move. That would just clear up the picture immensely. To finish up this triangle, get a thrust down, get a reversal. That would just set things up just marvelously. So we'll see what we get. GDX here on the weekly chart. We get a close below last week's intra-week low, so that's bearish. My expectation is we'll continue to see some selling to the downside. Here's the long-term count to the downside. This is what makes the most sense to me. We've got an ABC down for the first zigzag, and then a ABC up for an X wave, and then an A, B, triangle B, another thrust down for C, so another zigzag for a second zigzag, and then a 1, 2, 3 up for double X. And now we're working on the third zigzag to the downside. So we're on the final leg here of this particular pattern. And it should, from the top of wave B, should trace out as 5 waves. It's probably going to be very choppy, as it's probably a distribution wave, meaning that you, on a final leg, such as an inning diagonal, anything like that, it can often be very choppy as you have the last of the previous bulls exiting, and you've got new buyers, basically smart money, coming in and picking up the scraps of paper off the floor as the previous bulls finally give it up. And so I think that's the kind of behavior that we may be seeing, just some very choppy action to the downside, possibly into that August-September range for a potential bottom. Yes, it's true that we could potentially come down here and make an incremental low underneath 1640, maybe in the $15 range. And then I think we'll have another good chance of a major bottom and reversal. I thought we were going to get it here. We had a very nice end to a double zigzag, but it just didn't perform. We didn't get the 5 waves up. If we had got a quick reversal all the way back up here to the end of B, E wave there, 2750-ish or 60, that would have been a premium sign that we had indeed finished this bottom, this major bottom, and we're going to start with a major advance to the upside. Well, that obviously didn't happen. We just got 3 waves up and then this choppy sideways action. So the market is just simply not interested in advancing right now. So we'll just have to be patient for it to work itself out, finish its selling, and eventually we'll try to come in here and pick up a bottom. That blue trend line is obviously very stout in its resistance. It's been tested 1, 2, 3, 4 times now. So we're working on a potential 5, maybe even 6, rule of 4 or 5 or 6, which every iteration is going to be, you're going to be increasing the probabilities even that much more that we'll get a breakout every time we test it. I was thinking we might have gotten here, but obviously clear rejection, no doubt about it. So while we're below that 1991 level, my expectation is we'll continue to see more downside. All right, GDX. We are in a the QG3 is in a bearish alignment to the downside here. Again, all the lines are pointed down. Even the upper Bollinger Band is curled over. So, and we continue to close underneath the 3 EMA, which tells us that we are in an impulsive move to the downside. So, what do? You just have to respect it. And we're currently short with the miners, so I'm all good for that. And I would expect to see the 10 EMA and the 20 DMA as key levels of resistance going forward as well. Okay, so that about covers it for our PM coverage for the week. And hope you all have a great weekend, and we'll be talking to you later. Adios.